Guys, happy Tuesdays. We're almost at Thanksgiving here. Um, 2 more days to go. So hopefully you guys are having a good week. Not ODing too much on the trades and taking a little bit back. We got some interesting companies coming up today in terms of reports. We got ESK. I like this company. Damn, down $300 because of Ali? Why? The stock OLOI? Ali? What's up, RB Nickel? How you doing? Jimbo, what's going on? Good afternoon. Oh no. Got all my login information right there. Over. XPEV had a nice earnings today. Strong move up. Back test. Ran back up. So sexy. Oh, so sexy. Alright, let's see what's going on. ADSK. Damn, man. That's a good level too. 280s. 272 level here. Maybe 250s. ADSK. Go to 250, man. So ADSK had a pretty good earnings. Looks like they're coming back down a little bit after hours. Let's check that earnings out. Earnings per share is $1.33 as opposed to 126. Sales is 1.13 billion as opposed to 1.12. Since this is a 28% increase compared to the same period last year. And sales is a 18% increase compared to the same period last year. Last year was pulling 952 mil as opposed to 1.13. So let's check out what the stock price a year ago. Company was traded around 257 a year ago. 2 year ago basis, company was trading at 214. So let's say like 214 times 18%. Put it around 250s. So yo, if this company come back to around 250s, I probably pick some position up. I like this company, Autodesk. If you guys don't know what they do, they're like Autodesk is an application software that serves industries in architect, engineering, and construction, product designs, manufacturing, and media and entertainment. Autodesk software enables design, modeling, rendering, and needs of these industries. The company has over 4 million paid subscriptions across 180 countries. Pretty much all this company needs to do, bro, one simple thing. I can tell you one simple trick. All right, CEO of ADSK, I tell you one simple trick, and you guys can become the next $1 trillion company. One simple trick. It's like those Motley Fool commercials, yo. One simple trick. I'm telling you right now, get ready. One simple trick, ADSK. Advertise yourselves to be the next metaverse software. That's it. One simple trick, yo. Dead ass. I'm serious though, actually. If they could figure out a way to convert like regular blueprints to blueprints in metaverse or whatever, huge game changer, man. Huge game changer. Maybe they already done that. I'm not sure. I don't think they have though, because I would be able to upload some of the blueprints I have and just automatically build something in the metaverse. So I don't think they have it yet. I could be wrong, but I don't think they have done that yet. I don't know if they will do that, but that's something they should seriously consider. In fact, maybe I should shoot an email to them and then pick up some leads. ADSK sees full year 22 EPS at 498 to 504 as opposed to 499 estimate. Pretty in line guidance here. Sales is 4.74 as opposed to 4.80 versus 4.37 estimate. That's a pretty good, pretty bullish guidance on the sales side. So it should be doing good, but the company is flopping a little bit. Whatever, give us a discount. I like it. ADSK sees Q4 revenues at 1.18 to 1.2 as opposed to 1.2. So next quarter is going to be a little weak for them. Let's check out JWN. Damn, I was actually legit looking at JWN puts too. And I was gonna alert it, but it was kind of late, so I didn't want to be like, I don't want to alert it to you guys. But I actually I took them myself. For some of you guys in the challenge, I didn't want to hear people like cry that didn't get into the play. But I actually did end up playing them. I took the 27 puts. So for JWN over here, they were a little bit down. I forced them in, so kind of like forced the entry in there before market close, and they're like overpaid like $18, but it looks like they're about to pay off because I thought they could hit the set $27 area. So I show you why I thought they could hit the $27 area too. It was pretty self-explanatory, I think. Because I got back a little bit late today, so I didn't have a chance to like detail it. But I mean, this is the area they were at before, around 29s. A lot of the earnings had already been priced in because one of the other retailers had a really good earnings. So they already priced in the good earnings and they ran up here. So I figured that the most, like the least they could drop to was probably 29 on the flat earnings. And then worst case, they can drop to 20, 25, 26-ish, right? So that's why I took the calendars for 27, because as long as they're within that 26 to 28 range, I'm gooch. But if you took a straight put, you might not make as much money as a calendar. So it's a big difference there. So just be careful with that when you're taking straight puts and stuff. But let's see how they did anyways. Let's see what they did. Let's see what they say. Nordstrom Q3 earnings per share is 39 cents as opposed to 22 cents. Sales is 3.53 billion as opposed to 3.54. They did reaffirm their guidance for the year. They said this is a 77% increase compared to the same period last year, and 14% increase in sales compared to the same period last year. What Q3 of last year is nothing great to compare against, and if you're not like doing 100% compared to Q3 of last year, that's pretty ugly. The other thing was that I knew that over the weekend, when I was like looking up on news and stuff like that, I knew that a lot of these companies like retailers and you know, brick and mortar stores, they did not think they were going to have a great Black Fridays. So a lot of these guys were not pricing in for a great Black Fridays. So I figured because of that, at the whole brick and mortar stores are just like extremely bearish, man. I kind of wanted to short XRT really hard, which is retailers, but it's very like the spreads are very wide to short it. But that's good, yo. Die Nordstrom. Stay at 27. Wake up at 27 for me tomorrow, please. We can definitely take a look at Tesla for a little bit later. I got you. Just remind me again around 430s, 440s after we check out all the earnings. Hedge with 1126 puts, went in with January calls, puts will print. Nice. Congrats, man. Yo, I hope you made it okay this morning, man. You see why I hate Best Buy now, right? Trash company, but trash company. Die, Best Buy. Die. Dow and BMW ER. Dow should be flat, I think. Let me see. Let's check out BMW. VMware. $1.72 as opposed to $1.54 estimate. So earnings per share was beat. Sales is $3.19 as opposed to $3.12 billion. Compared to last year, this is a 3.6% increase in EPS, and 11% increase in sales compared to last year. So not like amazing data, it's pretty flatness compared to last year, but stock price is lower, much lower than last year's price. Last year was trading around 144. 2-year basis was trading at 170. Wow. Watch out for the stock, man. Why they drop so hard? Let me see. Look up why they dropped so hard. So it looks like they had a big drop here. That was November 2nd. Their news. Oh, Oh, they paid a special dividend. When is the special dividend payout? Oh, I already missed it. So a lot of times when dividends get paid out, it actually takes away from the stock's price. So that's why it kind of dropped a little bit. So dividend was like $21. They dropped $21 here. So it took away from the stock price. So then we have to readjust for the stock price on the chart. So last year, company was trading around 150s minus $20. Puts it around 130s. On a 2-year basis, if we took this 160 minus like 21, it puts it around 140s. So still a little bit on the value. So like 140. So that's a gap there too, around 137s that it could fill. That kind of makes sense. So as long as they're having good growth year over year and they're reporting well and guidance is good, they could potentially come back to that area there. If you guys are bullish, that would be where I would take it to. So this is BMW. Nice. Yo, what's up, Deluxe? What's going on? So that was that. Let's check out some of the other companies that had earnings. Guess also had earnings today. Looks like they did pretty good actually, gapped up. Maybe they'll give us some of the gains tomorrow. Do people even shop at Guess anymore? I feel like Guess is such an interesting company. Either people really love them, or they really hate them, or they're just like weird. Earnings per share is 62 cents as opposed to 45 cents. Sales is 643 mil as opposed to 611 mil. That's the top and bottom beat. 6.9% increase compared to earnings of last year and 12% increase in sales compared to last year. Where's the stock price trading at last year? It's trading at $18. 2-year basis was trading at 23. So I guess it could come back to the $23 range. A little cheap compared to that. They expect the full year outlook for operating margins to be 11%. I'm not sure what that number is compared to, so that number is irrelevant right now. Is Guess making a comeback? I'm not sure. I think I've only been to that store like once or twice in like the last 10 years. They usually have pretty sexy models though, like in the store window, or like sexy associates though. I think I only bought one item from there ever. Maybe like 2 items. I bought like a leather jacket, like a fake leather jacket from there. Is that what we call like folks leather jacket? I don't know. It was pretty cool. HPQ4. So HBQ also reported EPS was 94 cents as opposed to 88 cents. Sales is 16.7 billion as opposed to 15.4. This is a 51% increase compared to the same period last year, and 9% increase in sales compared to last year. Yo, HB has low-key been killing it. Last year was trading around $21. Now it's trading at 35. On a 2-year basis, it was trading around 22-ish, and now it's trading 30 something. Wow, big increase, more than 50%. What are they saying here? They see the full year 22 earnings per share at $4 to $4.27 as opposed to $4.05. So they think they're gonna have a really good quarter. Next quarter is guiding pretty strong too. But they've been saying this all year. They've been having really good quarters all year. I think they're actually slowing down a little bit because I remember the previous quarters they were beating by like almost 100%. Plan also posted earnings. EPS is 5 cents as opposed to 11 cents. Sales is 155 mil as opposed to 146 mil. This is beat analyst estimate by 55%. Compared to last year, sales was a 35% increase, but earnings per share didn't move much. Full year guidance is a little bit weak, guiding around 570 to 573 mil. No, actually that's not. It's actually better. My bad. They've raised the full year sales guidance. Originally, they thought they were gonna make about 571 to 573, as opposed to 573 estimate. Now they said they're gonna make 583 to 584, as opposed to 573 estimate. So that's actually bullish on the bullish side. And Q4 sales is a little bit bullish too, estimating 154 to 155, as opposed to 152. Company did drop after hours though, a little bit, drop out for, oh no, not $4. It dropped about $7. So last year, company was trading around 68. Pre-COVID was between 52 to 64. This could be a value opportunity at this point. Let me see. Friday close. Careful, man. This week is a short trading week. So like there's not gonna be a lot of volume throughout the whole week. Because we got Thanksgiving, right? For some of you that may or may not be familiar, so we're gonna have Thursday close. Friday, I think it's probably gonna be like open maybe half day or something. But just don't expect any crazy volume. Things are gonna be slower. Things are gonna be weaker. And there's gonna be some data burn. So we'll take a look. We'll take a look at some Roku in a little bit. Take a look at it for you. We'll see what direction it is and what the indicators are saying. Wait, apparently they're on the AWS launch. I'm not sure what does that mean. Does that mean they're integrated into AWS? So it looks like they're making some big plans with Amazon and Google Cloud. I'm confused here. This looks like a buying opportunity. Subscription revenue from 2020 to 2021 is up. Total revenue is up. Gross profit is up. So this is 2020, 9 months, and 2021, 9 months. Net loss is also up as well. So that means they sacrifice about 32 for 100% increase. I mean, not 100% increase, a little bit increase there. So net loss definitely went up too. So that's where you kind of see that net loss per share is opposed to net loss in total. Last year they lost about 81 cents. Now they lost about 99 cents. So even though revenue and gross profit increased, loss also increased. So that means they're growing at the cost of something. Let me take this call. Hello? What's up? When? Yeah, what time you wanna go? I think they close at like 8 or 9. I think they close at, let me see what's, I think they close at 10. So we either go at 9 or 10, or we can go at like 7-ish. I'll try. Yeah, I'll try. I'll hit you up in a little bit, man. I'll hit you up in a little bit. Alright, peace. Let me see if there's any bad news that caused the drop too, but this is one of these companies that actually look for an earnings. I look for opportunities like these, and drops like these are usually pretty good. If they're doing good things, they continue to grow year over year, and you know, fundamentally the books are good and everything. It's like, why isn't a buy, you know? So let's see. Last time they had a big drop was in February of here. Let's see if there was any big news over here that justified that huge drop. Oh, that was an earnings drop actually. Last earning was a huge drop too. So I would say just all earnings drop, I guess, at this point. Never mind. I'm just posting wider losses. So $50 is gonna be a level there. 45.90 is this other level. And then let me see. Let's look at it in the weekly chart. We'll say we probably got a level over here at $41, $42. If momentum wants to carry us there, that would be super buy the dip. So sometimes if you want to look for really long-term support, you want to go on the weekly chart. So we're finding a little bit, you know, previous resistance here. Saw some support here and here, and that's how I'm finding these numbers. So here's some support levels of the plan. Looks pretty good. Let me see. So you guys are asking about Roku and DKNG. Let's check that out. Do we have any other earnings today, or is it done? Oh, Dell. I think this is the last earnings for today, probably. The last popular earnings. We had Gap, we had Nordstrom, Dell, Autodesk, VMware, Anaplan, so HP. So let me take a look at Dell and GPS and Gap. So I want to see why Gap did so bad. What did Gap do? Earnings per share is 27 cents. I suppose it's missed. Wow. Did somebody boycott Gaps, or they just had supply chain issues? Nothing is loading either. Everything is broken right now. Gap says the company is revisiting its full year 2021 guidance as a result of ongoing supply chain disruptions. Q3 EPS, earnings per share is 27 cents as opposed to 50 cents. Sales is 3.9 billion as opposed to 4.44. 8% increase compared to last year and 1% decrease compared to last year. Whoa, how do you have worse sales than last year? Bruh. They say Gap is crushed after saying supply is not keeping up with demand. Ooh. You gotta stop hiring these little kids, man. Gap cuts full year 21 EPS guidance from 210 to 225 to $1.25 to 140. Oh, damn. They got smacked. That's a bad cut. And full year sales growth 20% year over year. So they're seeing growth. They have demand, but they just can't get the sales out. Oh, this company got wrecked. So they're about to take a huge hit on the margin side. I probably look for some interesting opportunity if they come back to like $18 range. If momentum can take them there, if they keep dropping, they can easily come back to 18s. So 18s would put them around like this range right here. GPS. That's ugly. Let's see. Dell also reported EPS as 237 as opposed to 218. Sales is 28 as opposed to 26. 16% increase compared to the same period last year and 20% increase compared to the same period last year. My chart is not loading. Did my Bazinga just die? It's over. Everything is dead. Short Bazinga. So Dell looks flat, not moving much. Huge growth compared to last year already. Dell's already been up. Dell is up 100% in terms of stock price from last year's. So they're probably gonna give it up and come back down a little bit. I would not be surprised. It's not that sexy of a company. All right, let's take a look at some of the things. Roku, right? Who was asking about Roku? Didn't somebody ask about Tesla too? Is that person still here? Yeah, retail stores are getting wrecked. Supply chain issues are coming out, and they're like just slashing them, slashing their stock prices. It's like Foot Ninja. You guys know Foot Ninja? Foot Ninja was like Fruit Ninja. It was like one of the best games back in the day. 2010, best iPod game ever. It was the shiz. But imagine like kiwis, but like watermelon. I kind of miss this game. I might play this again, man. Like imagine all these fruits and stuff. You just have retail names like logos. Like it'd be like Gap logo. It'd be like Nordstrom logo, Foot Locker logo, all these logos, right? And then you're just like just slashing them. Yeah, this game was fun. It was so fun. Like I remember, like I took my date to like Dave and Buster's, and they had that game there too. And we were just slashing it. It was fun, yo. Sorry, Roku. I charted this a while back. I inverted the chart at one point during one of the streams. Roku has the best double bottom setup right now, right? Look at this double bottom setup. Look at this. Look at this. What does double bottom setup tell you? Most bullish signal, like out there, right? Double bottom setup. So ideally, would love to see Roku to like come into the top over here. So I think anywhere from between 236 and the 200 range, that's a good area to like potentially buy in terms of long-term shares or leaps from the double bottom setup, right? But you know, that's just that's the double bottom inverse, right? But what's the opposite of double bottom? Extreme bearish. So I think it could potentially come here too. I'm not gonna be crazy about shorting it at this level here, between this 200 to 235. This is probably where the buy the dip level is. Look for like a reversal. Hopefully, if you guys are bullish on Roku, we could see anywhere of a reversal to 270s, because those are some good supports over here. You know, that would have been a sexy move if they had a triple bottom there, but it didn't happen. So I'll probably look for that to happen if you guys in Roku. It does want to bounce on the daily chart. The indicators are pointing out, like, and the daily chart indicators are extremely bottom out with the RSI. I think right now, I think they're just shaking out. They're just shaking out like buyers right now. They're just shaking out the fruit tree and trying to get people out. As once they shake everybody out, I think it's gonna start to move. And you know Roku, when it moves, like it doesn't play games. It like freaking jumps. It could move 20 points in a day, and you guys would just be sitting there watching. So I think it's a good idea to have some position. I probably open the spread if I was you guys. If you guys do naked calls, you know you're gonna get burned on that premium, that time data burn. So that's gonna be painful. Let's sound. Thoughts on Hood? Robin Hood? Hate that company, man. Let's take a look at Tesla from somebody else. From Mocha this morning. Wow, big move on Tesla today. Let's take a look at this shorter time frame. What are you playing on Tesla, man? Are you playing calls, puts? So I think we charted Tesla last night. You know, we have Tesla that kind of like had the double bottom set up here, broke above the moving average resistance here. It looked like it's moving up. So what's the best thing you're looking for when something is moving up and it broke over resistance? You're looking for a retest, right? You're looking for that back test, and that's kind of what Tesla did today. Tesla had that back test, holding the line here and bouncing off the back test. So I think that's pretty bullish. So I think that's pretty bullish. You know, it bounced off that back test over there. Let me find the line. Let's see, what is that line here? So we bounced off that back test, 1080s. And it's looking like it's moving pretty well. I think as long as the stock market in general is bullish, we could potentially see this come back to like 1180s. Why not, right? Nice, very nice. But yeah, you know, like if you guys know me, you know I'm not crazy about this company, like long term or just in general. It's not a stock that I like to play a lot, but every once in a while I do touch it. Maybe like once a year, man. Tesla is like that. It's like that. Actually, I'm not even gonna make that reference. but I do think it is kind of bearish though on the long-term chart as well. So it really has to depend on what it does tomorrow. So if you guys are bullish, you can start taking profit around 1120. That's gonna be a good area. Next area is 1180. So let me put this. So that's on short term. Short term basis is 120, 1120 to 1180. Now on the long-term basis, right? If I was taking it for a swing trade, it's still looking bearish. So on the swing trade side, if we close under 1100, on the swing trade side, if you close under 1100, that has the potential to come back down further. And then if we can close under 1050s, yo, next level is 900s. So this really all depends on the weather. And what I mean by weather is the market direction, right? So like if we're looking at the S&P 500 and the S&P 500 is having a correction, you know, and it's looking like it want to come back down to 445s. What do you think Tesla's gonna happen? Tesla's not gonna do the opposite. It's gonna get hit by the weather, you know, eventually. So, and that's what S&P 500 is looking like right now. On the daily chart, S&P 500 is looking kind of bearish. It's showing signs of a reversal to the downside. And like, I mean, I'm just saying what the indicator is saying right now. I'm not, you know, I'm not speculating exactly on what the stock is going to do. I'm just saying what the candlestick and what the indicators is telling me. If you look at the candlestick, we just, you know, went from green to red candlesticks, and we just had, you know, a lower close than yesterday, right? So what that means is that it's kind of bearish, just signaling to the downside. Now, it doesn't mean that it could do this tomorrow. You know, that doesn't mean that we can come back and look bullish again tomorrow by finding the bottom and closing above today's levels. So that could happen too. It could either be one of these. So we could either be seeing one of these, you know, or we could be seeing one of these. Or we could be seeing one of these. Or one of these. Or one of these. You know? One of these is gonna happen. So I'll post this in our discussion channel as well. So we'll see. We'll find out, man. Good luck, boys. If you guys, do you guys want me to set up a spread for you guys on both directions on Tesla? Maybe I'll set up a spread for myself. Alright, I'm gonna show you guys this crazy spread. This is either gonna make you a buttload of money, or you guys gonna lose a tiny bit of money if we are on the bearish side. So on the bearish side, if it comes back down, right, you see these arrows here. The yellow line on my algo is the make or break line. That's a line that it comes to, and either A, it bounces, or it just like dead. It just dies, you know. So that's why it's such a big make or break line for me. Like you can see over here, broke under and just dead, right? And then over here, it's just like pew, pew, and then pew, and pew, and just like flew, right? So that's why the yellow line is such an important make or break line for me. So if you guys are bearish on Tesla, I'm gonna show you this one play that you could potentially be making dumb money right now. If it goes in our direction and it goes down to 928. Who's ready for that? Who's ready for this? Who's ready to make some dumb money? So let's look at it here. If this were to happen, I don't think it could happen this week. If it did, it would be bad. Um, if this were to happen, I think it would happen either at next month's expiration or the beginning of next month. So I would say I would go a month out. Um, Maybe not even a month out, but just like 3 weeks out, because I think it would either happen on the 10th by the 10th, or it will happen by the 17th. So we're looking for 928 target by December 17th. So let's pull that out. 928. So since I'm going for the 928 target, I'm gonna assume for that number to move up from 928 to 930s. So it would cost $52. It costs $52, man. Wow, that is cheap. That is hella cheap. So it costs $52. If this happens, you know, if this gets to the 930 range, right? Let me see. So if this goes to the 930 range, you would risk $52 on this butterfly to potentially make anywhere from $30 all the way to 1,848, or maybe like 600, or maybe like 600. But in order for this to happen, we would have to be like hitting the bullseye. We have to be hitting the bullseye on the spot. Like it would have to go here to this area on December 17th. Like we would have to land the bullseye exactly at 9:30 by December 17th, in that range for us to make dumb money. But I mean, even if it goes in that range, you can easily pull the 100%, you know, on like, even if it's like sub 1000s, you can pull 100%. So then that's interesting if you're bearish on it. If you're bullish, you can go the other way too. Bullish, you can shoot for like 1250s. 1250 could also be a bullish number. Like that could be a psychological and a magnet level as well. I would consider that like a hedge position or a lotto position. Like you only take this position if you only take this bearish position if you already had so much calls in your portfolio and you're like hella bullish and you're like market is going to the moon. That would be a hedge position. Like if things just completely play out the wrong way that you're looking for, this would help you. This would save your portfolio. Twitter, let me see. December 17th, $50 calls. Twitter's been downtrend. The whole social media sector has been a downtrend. We are seeing some long-term support on Twitter over here. I probably wait for that area to pick up. Was that 44, 45s? You can start a small position for 50s, right? There's some resistance at 49s right there. And then kind of go from there. If it comes back, you know, could potentially comes back to like to that range at 52, 53. I think you got good enough time, CP. It's reasonable. I would start a small position and add if it comes to like 44, 50s. What you're screaming in Discord, CP? Anyways, I pasted in the discussion channel, so hopefully you'll be able to see it. Well, Walmart is actually looking good, looking like it could first come back. Dollar Tree squeezing out shorts as we kind of anticipated yesterday. Target possibly setting up the reversal. Yo, we were just talking about this the other day too. Target finding the bottom here at 240s. So it did find that bottom, starting to make a comeback. Target 253s, let's go. Oh, Hood? Let me take a look at Hood now since we looked through all the other tickers. My bad. Why do you like Hood? Yeah, their earnings. We looked through Hood's earning last time. It was really, really bad. There's so many people coming in to eat their pie, and like they were at a point where they could have made a lot of money, but now everybody and their mother is coming after Hood, and they're trying to jump them, and then take their cake. So it's been kind of going down a little bit. I mean, it's also one of the most hated stocks in terms of the stock market as well, just because their platform has G so many people, and then Fidelity. I'm not sure if you're familiar with this or not, but Fidelity just made a huge move, like a big move after Hood, and like I would say probably some of the biggest user of Robinhood would be like Wall Street Bets, right? And Fidelity just did one of the most smartest move ever. Whoever's in the marketing department should get a reward. They should get the marketing reward of the year for doing what they did, because like advertising war of the year, Madman reward of the year, man, because they had started a meme, and they made a meme post and they posted on Wall Street Bets, and they literally were giving people $50 just to sign up on Fidelities, which is like a boomer exchange, right? Really crappy exchange, but they were one of the few exchanges that didn't G everybody during the GameStop and AMC Sega. So they could potentially, if they roll out a sexy app, they could potentially take every single Robinhood user away and move into their platform. So look it up. Look up like Fidelity, their memes and stuff. It's a huge move, very smart move, and that could grow that company a lot. I wanted to invest in that company because I like that move a lot, but they didn't have a stock. I couldn't invest in them. So I mean, yeah, Hood could dead cat bounce. Indicators are signaling the bullishness over here. So usually the indicator is a little bit ahead. So we are seeing some bullish signal over here in the half-day chart. Just like how last time it did signal, right? And then it ended up making that move afterwards. So we're just waiting for that crossover confirmation. So if you're bullish, I mean, you're saying that you're looking to load up between 25 to 20. I think those are good levels. It could dead cat bounce, and then potentially come back to $30 ranges here like it did last time. Because what goes down must come up a little bit, right? That's what dead cat bounce is for. So we could potentially see that slight move. It's not something I'd be playing, but I could see that move happen though. That makes sense. That cat bounce when. All right, I got you. DKNG and cat, right? Yo, all my DKNG expired last week, so I have like no DKNG position left anymore. I don't know if I want to add or not. It's kind of bullish going NG, looking for that. What do you call it? Football run, right? But they had the really bad earnings, and then Pens, the other like company, the other degenerate company didn't do so well as well, and they just kind of both like pick each other down. They just like pew hit each other, and they both went down. So we're at a good level if you're looking to buy the dip, $35 range. So we found some support there before. So if this area holds, we start finding that bottom. RSI is bottomed out as well. it's begging to bounce. It's begging to bounce. I kid you not. This is begging to bounce. And if it does, it could potentially bounce to 40 and 42s. It's literally asking for it. It's like, please save me. But it's just like, it's just a matter of if enough volume, enough people comes in. If nobody comes in, then it's gonna come back to the next level. If people do come in, this is gonna be it. This is gonna be the $40 level. So I pasted in the discussion channel in Xtrades. So if you guys looking for the chart, check it out there. Price are on the side here: $40, $35, and whatnot. They just need to throw out some good words, man. DKNG needs to go like, we're going NFT metaverse. No problem, man. I got you. Alright, and we got Caterpillar. So let's take a look at Caterpillar. Caterpillar was trying to make a reversal here the last few days. You know, everybody and their mother was like, infrastructure bill, Caterpillar to the moon. Why not, right? Like, why isn't Caterpillar going to the moon-based infrastructure bill? But I don't know what happened last Monday. Caterpillar opened up, and all it did was went down. You know, what was last Monday? 15 to 15. The 15, man. It was looking so bullish. Everybody was so happy. We saw the infrastructure bill pass, and we're like, moon, 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 moon. Right, and then Caterpillar just kept pooping. Just kept pooping for like 2 weeks, yo. Jeez. So, but like I said before, it's at the make or break line, and we could potentially be finding a bottom here. So it did bounce off that a little bit. So I think as long as we're above the $200 level, Caterpillar can move back up. Obviously, first level is a 209 here, right? And then after 209, so we'd love to see it move up to 15. And then if market can remain bullish enough, maybe 223. And then if market can get even more bullish, you know, maybe 245 due to infrastructure bills, right? Those are some very, very bullish thoughts there. Let's see if we can manifest it and make it come true. For you guys back holding it on the bullish side. Unless you guys are bearish, man. If you're bearish, look for that break over under 200. But like I said, this all depends on infrastructure bill. This all depends on the stock market, direction of the stock market, and how that weather in the stock market is, right? So that in that relation, we could say Dow Jones as the weather for the cat. So Dow Jones is kind of looking bearish as well, right? So even though we want cat to be bullish, either A, cat is gonna carry the Dow Jones up, or the Dow Jones is gonna carry cat down. So always look at the weather, man. I keep telling you guys this. The weather. The weather. What is the weather? The index. Amazon. Alright, we're doing one last ticker, and that's Amazon. I don't like AMAT. I'm telling you that now. I don't like AMAT. They had the earnings. We looked at the earnings. It was completely trash. Don't want to touch that. Unless you're going bearish. AMZA, Copper Magics. So Amazon coming back to that 35.22 support. I think we talked about this yesterday too. That's an area where you can potentially come back to and see some bounce and support. So you can set up a I know you're probably looking to set up butterfly. So this is probably a good area to set up a butterfly. Could potentially bounce from here, right? If we're looking for chop in the market. I don't think we're gonna drop that much. I think we could potentially see chop in the market until like Friday. On Friday, we're either gonna take a very bullish direction or bearish direction. But let's take a look at historically what happens on Thanksgiving. Can somebody come up with all the Thanksgiving days for the last 3 years or last 5 years? Every year is like the 25th. Thursday. Alright. Every year is 25th on Thursday. Let's check it out. So last year, Thanksgiving. So last year, we were looking bearish on oh, that was Amazon. I was looking at Amazon. So last year, market was looking bearish. Thanksgiving happened, moved back up. They call it the Santa rally, they said. They say stocks only go up, they said. Let's look at the year before. Thanksgiving, market was looking bearish again. The 20th, the 21st, the 22nd, the 25th, boom, 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 moved back up. I think like Thanksgiving on Friday, the Black Friday is usually the day where it gets pretty bullish. Yeah, same thing here. So it was bearish in 2018, and then after Thanksgiving, people ate all their turkey and they were like, Santa rally, and then ran back up. This was the year I lost a lot of money. And I went to the crypto market and made some back. Oh, no change here. We saw some chop prior to Thanksgiving. And Thanksgiving, Santa rally went all the way up. Went by all-time highs too here. So far, we haven't had a crash after Thanksgiving. So far, in the last 5 years that we checked, the day after Thanksgiving, it's either flat or tiny bit bullish. Yeah. So, tiny bit bullish. Sell some iron condors for Thanksgiving. Historically, Thanksgiving weeks has been pretty good. But that's pretty much it for today, guys. It's 5 o'clock. We'll end it here. Let me just pull up the AMAT chart for Mocha real quick. Since you've been here all day waiting, man, on 3:30. So you know, you see this chart, AMAT, looking a little bit bearish, moving back down. This is not a good earning. Dividends coming up. Usually dividends aren't that bullish for the company either. But except for here, so we'll see. I think it can potentially come back. Do you like this company, man? Or are you shorting it? You're welcome, guys. What's up, G Money? Thanks, guys, for stopping by and hanging out. And have a good night, man.